Hi there, fellow investors. Copart stock is down 30% and the CEO is acquiring 50,000 shares, and insider buying is always a strong positive signal. And Copart has a recession-proof business model, and a recession might be somewhere in the future. We don't know that. So this might be a good addition to the portfolio right now. So today we're going to have a look at how cheap the stock of Copart actually is. I'm going to give you my intrinsic value calculation, of course. I'm going to explain why insider buying is always a good signal and we should pay attention to that very strongly, and why a recession-proof business model could be a really good addition to the portfolio right now in times where people thinking, okay, a recession might be around the corner. Thanks for tuning in. First of all, let's have a look at the financials and the intrinsic value. So revenue, we can see nicely growing, steady tendency, stable growth. 2026 is expected to come in a little lower, but growth is not slowing very much here. So I think this is more or less stable. Earnings per share are going up nicely. The growth trend seems to be sideways here, so always around 10%, 9-10% in the mean. So really good earnings per share, free cash flow, good development, going up. I'm really content with the financials here, and the debt to equity ratio is a dream. I have to say it's incredibly low and it's even decreasing. So the company effectively has no debt, and when you have no debt, you cannot go broke. Very solid, very healthy. Also, due to the drop in the stock price, the PE ratio has come down. The trailing 12 months PE ratio now sits below the 5-year mean at about 26, 27. The PE ratio for the next 12 months has also come down below the 5-year mean and sits now about 23 and 24. So a reasonable price for the company. I don't think it's undervalued though, but I'm going to get there in a second for the intrinsic value calculation. Before that, let me just also show you the return on invested capital. Here we have a decreasing trend, but it's bouncing back. So in the long term, it might be more or less stable. The 5-year average is about 30%. And that's very good. So I would want to keep watching that, of course. I don't want this to keep falling further. Then I would have to ask questions about profitability. So financially speaking, we have a very healthy company here, no debt, so they can really finance anything they want, and they are not dependent on interest rates or anything. If interest rates go up, they don't care. If they go down, they don't really care. So really healthy stuff. And let's have a look at the intrinsic value right now. And including a margin of safety, I get an intrinsic value of $41 right here. The current price sits at $44, so the current price slightly above that. So as you can see, I don't think it's undervalued. In fact, in the worst case scenario, I think it can go down another 32% to $30 more or less. But I already bought in the stock because I think it's fairly valued and I think it's a good company. The upside we have at 150% right now, and the price of $115. So if you can live with the risk of it going down another 30%, I can live with that. I only opened a small position, and if it goes down, I'm going to buy more. All right, let me just scroll through my scenarios here, my assumptions. You can just pause the video, have a closer look at them if you like. My assumption is a free cash flow of $1.23 billion. And here again, you can see they have a cash pile of $2.7 billion with only debt of $100 million. So they could pay that off easily, and they would have so much cash left over. In fact, they are buying back shares right now, so really healthy sign. Here I have the news article on investing.com where it says that the CEO, Leo, exercised options to acquire about 50,000 shares. Yes, if you read the paragraph up here, it says that he's selling 24,000 shares, but he's also acquiring 50,000 shares through an option. Now, that might be a good sign, doesn't have to be, because if he sells these shares right now, then it's not really that much of a sign. But if he keeps those shares for the long term, then this is a buying signal, an insider buying signal, and this is what we should keep watching. Because why is this important? Insiders buying is always a good signal, because why would they buy in if they didn't think the company or the stock price would go up? Right? It doesn't make sense. There's no other reason. This is strictly positive. On the other hand, when insiders are selling, that doesn't have to be a bad thing, because when insiders are selling, that could be for tax reasons, it could be because they need some cash for personal expenses, but it doesn't have to be because they think the company is overvalued or anything. I mean, it might be, but it doesn't have to be. So we see a strong buying signal here from the CEO. Now we would need to keep watching. Does he sell those shares right away? And if not, then this is a really strong signal. Let me argue why I think this might be a good addition to your portfolio during a recession, because a recession might come, might not come. But anyway, people are buying gold like there's no tomorrow. So let me show you the business model. So Copart, they offer auctions for cars that are basically broken or nearly broken. And who's offering these cars here on the platform? Well, these are mostly insurances that think, okay, the car is too expensive for us to fix, so we're going to sell it, or we are going to auction it. And who are the buyers? The buyers might be people or private people who say, okay, I can fix this. It might be car dealers who say, okay, I can fix this. This is cheap material for me, and I can resell this later on at a profit. All these cars might even be shipped to another country around the world where repair might be cheaper than in the US, for example. And what happens during a recession? Well, during a recession, it's actually the case that the people might have more of a motivation to buy such a car because a new car might be too expensive to acquire at the time. So I think this might be a good opportunity for Copart actually. And it's very standard the way they make money. They just get a fee for every transaction. So this is how they make their money. This is why I think this is more or less recession proof. If I'm missing something here, guys, if you have a different opinion or view on the stock, please let me know down in the comments below. I'm happy to discuss. I think it's at a fair value right now. I think it's a good addition to the portfolio. I opened a position. Let me know down in the comments what you think. Please hit the like button, subscribe to the channel if you like more stock analyses like this. Thank you for tuning in today, and I'll see you in the next one.